Are you ready? You're fine, you're ready.
Yeah, all good, thank you.
So, thanks to the early people who woke up early this morning, we have a 45 minutes panel around African FinTech going global. I'll be chairing the session for you, and I'm very pleased. So I'm Xavier from Ditos, from Mauritius, and I'm very pleased to meet and to introduce Gavin Sirkin. I hope I pronounced well your name.
Yeah, hard to get it wrong.
Great. Gavin is an author and managing editor in New Markets, Media and Intelligence. Gavin has been a prominent commentator on frontier and emerging markets for over 2 decades. His book, Exploring the Top 10 Emerging Markets of Tomorrow, was acclaimed as a must-read by the Financial Times. His latest book, Chain Reaction: How Blockchain Will Transform the Developing World, was described as the perfect way to step beyond the cliché about blockchain and explore the full range of possibilities in a rich and compelling way. Gavin worked leading Bloomberg's teams of journalists uncovering these derivatives that triggered the global financial crisis, won him the Society of American Business Editors, and he subsequently creating and leading Bloomberg's emerging market team. Gavin founded New Market, Media and Intelligence in 2015 to help drive responsible investment to frontier markets through innovative media and investor engagement. With a special focus on Africa, he advised United Nations Economic Commissions for Africa and the Africa Finance Corporation. Gavin is a frequent guest lecturer on emerging and frontier markets, including at Northwestern University. So, Gavin, the floor is yours, and thank you for the session. Thank you for the panelists.
Thank you so much, Xavier. So thanks everyone for joining. I think if we, like Covent Garden busker style, if we make a lot of noise, then other people will come in and we'll have more fun. You've got, it's been well worth it. We've got some really strong experts on the field of fintech in Africa and how it can go global in different aspects and different sectors and countries. So what I'd like to do is go one by one through the panel, let them introduce themselves and the work that they're doing and how that relates to fintech. So Chris, please.
Thank you very much, Gavin. I'm Chris Waby. I'm the CEO of Lendable. We're a provider of debt capital to fintechs across emerging frontier markets, so covering Africa, Southeast Asia, and also Latin America. We service both payment companies, but also lenders in terms of asset finance, MSME finance, consumer finance, and also effectively anywhere we can securitize against a receivable, so embedded finance, SaaS companies, and increasingly sustainability-linked financings.
And how does your work relate to African fintech and the prospect of fintech going global?
So I think we're probably the largest finance on the debt side of fintechs in Africa. And I think the real edge to what we do is that we're a technology-based company ourselves. We're a fintech, if you like, ourselves. And we have an ability to integrate with the systems of fintech companies so that we can track their receivables on a live basis and then also audit those against their bank accounts and mobile wallets so that we can verify that the information they provide is correct. And being able to do that means we can finance areas that potentially traditional players could not.
Okay, thanks, Chris. Jeff.
Thanks, Gavin. Jeff Stein, Vested World, co-managing partner. We are an investor in seed to Series A startups across Africa. There are 5 fintechs in our portfolio, another 3 that are adjacent or have some sort of embedded finance component to them.
Okay, thank you. And Joe?
Hi, good morning. I work with Crown Agents Bank. I'm their chief commercial officer, and what we do is we provide FX and payment movement into Africa. We work with a number of African fintech companies, and those fintech companies can be people who use our wholesale service for FX and money movement, but they also can include mobile wallet companies and other types of fintechs.
Okay, thank you. And Mylis.
Hi everyone, I'm Mylis. I'm the Managing Director of the Catalyst Fund, and Catalyst is a pre-seed VC fund and accelerator that invests in early stage fintech startups across emerging markets. But 70% of our portfolio is in Africa. And so over the past 6 years, we've worked with credit companies, with remittances companies, savings investments, and as well as embedded finance startups across the continent. And it's really a pleasure to share some of those experiences with you all.
Okay, so Mylis, let me begin with you in terms of the topic. African fintech going global, but we're in a situation where the world is risk averse. Investors are not focused so much on Africa in general, and technology is often further down the line in terms of this being maybe less tested. How are you finding the current environment for African fintech?
Great question. So when we look at the data, and we actually work with, I don't know if you know this initiative called Africa the Big Deal, which is essentially a platform that maps all the deals that happen throughout Africa. So we've actually seen that the fintech sector, VC investments in Africa over the past year have actually gone stronger, like quarter on quarter. So there's been a 150% increase year on year in terms of VC funding invested, and we're actually on track to reach this year, compared to 2021, where we reached 4 billion going to the African continent. We're on track to reach 7 billion this year.
Why is that happening, do you think?
I think there's a lot more excitement from investors like all over the world to look at what's happening on the continent. There's a lot of innovation. Of course, challenges means opportunity. And there's a lot of white space to create, and a lot of entrepreneurs like looking at that as a big opportunity to change the way things work, from the way financial services are offered and beyond, like essential services. That said, this quarter, we are seeing a decrease. So last year, fintech closed at 53% of total funding going to African startups. Now we're probably going to close at 40% of the total, and there's definitely been a decrease this quarter. So I think we're kind of catching the tail end of the market situation currently. That doesn't mean, though, that I firmly believe it's just temporary, and I think it is going to just getting stronger over the next few years.
Jeff, I saw you nodding. I know that you've had a busy start to the year, and busy year in terms of investments from Vested World. Tell us about how you're seeing this environment, the risk aversion that we've been seeing in public markets at least.
Well, so I would start by saying I think the start of the year and the second half of last year was characterized by a lack of risk aversion. So we were seeing very high valuations, lots of excitement, lots of international investors coming into the market, making their first investments, or second, first few, many of those into fintech, and I think that felt very comfortable for them as something they'd seen develop over the past 20 years in other markets, digitization and consumer acceptance of fintech applications. For us, we tend to focus on more, not to be cliche, but picks and shovels types of fintech investments, and I think that's been an area where there's been a lot of innovation, and there continues to be a lot of innovation that we're seeing right now. So we're not really pulling back on those investments, but we're definitely, we have portfolio companies and stuff in our pipeline that international interest just fell off a cliff. Call it May timeframe.
Mm-hmm. And Joe, from Crown Agents, how are you seeing things in this environment?
I would say, I think these guys have both captured it really well. Our partners, those who were out a little bit earlier, needed to get capital. They got their capital. I think now it's a different day, a different market. Some of those folks are even, here at this conference. I think I think that there is, certainly more demand than supply, and I think. I hope that Mylis is right. I think it's maybe it's a a period of time where we're going to have this gap, but I think it will come back. There's still strong interest. They're just not executing, from what I can tell.
Yeah, and Chris, from a debt market perspective, I mean, I suppose interest rates are just so high at the moment. If you're an investor, you can take your pick of high-yielding assets. You know, going into African fintech is a bit more due diligence involved. And how are things from your side?
Yeah, I think there's pros and cons of looking at Africa relative to other markets. I think the pro is that in Africa, I totally agree, last year you had a overzealous capital market from an equity perspective, but in general, in Africa, you've been less well served from international capital than, say, Asia or LATAM. And so we tend to see that actually companies in Africa are a little bit better disciplined, maybe have had to think more about profitability rather than just growth. And so I think from an investment perspective, actually there's companies that are diversified regionally, they're actually lower risk than you might look in some other regions because they've just had to have a culture of management that's a bit better. So I think that would be a positive for the African environment. I think a negative, not just for Africa but for everyone, is that you've had this rising tide that's floated all boats. So even if your model didn't really work, you probably could raise equity anyway, and that will change now. So if the business model is not really appealing, can't really scale, doesn't really work, I think you are going to see that some firms do fail. Mm-hmm. So I think you've got to be careful who you pick and make sure that the business model makes sense.
Okay, so who you pick? Which innovators, the title of the panel is African FinTech Going Global. Which innovations, which innovators do you see out there that have that potential maybe that we haven't seen yet?
So I don't know if I hadn't seen yet, but I think the two biggest strengths we would see FinTech-wise in Africa would be the payment space. Credit just being one of the players, but I think Africa's come from a position of having a very fragmented payments infrastructure, together with really being the leader in terms of digital money and things like M-Pesa, sort of kicking off the trend of e-money. And so I think in that domain, Africa is ahead of the game in terms of sophistication and knowledge. I think that is spreading to other markets. And then I'd also say asset finance, productive assets. There are a number of fintechs that have really been able to take very, very decent margins while also creating a productive outcome for the beneficiaries. So those are the two areas we see the greatest strength.
And Joe, do you see?
Yeah, I see a lot of innovation. So I would say mobile wallets are very, very key in the growth of fintechs in Africa. Last mile delivery is important, and I think remittance companies are also playing heavily into that space. So I think those are the growth areas that I see. Some of the bigger infrastructure players, so call them payment processors, I see some good action going on there too in a few countries, but I think those are the areas I would point you to if you asked about it.
Yeah, and Jeff, I know that Best of World is in a lot of different sectors. Where do you see the innovations, the potential global innovations out there?
Yeah, I think my colleagues here on the panel have already mentioned the big ones. I would say one area, social commerce. I think no one does social better than Africa, so I think that's going to be an interesting place where innovations may find their way to other places.
Such as what?
Well, so probably what most in the audience are familiar with is now being able to transact on Instagram, linked directly to, and what we're seeing in Africa, though, is more like buyers groups, so being able to buy together and then split, whatever it is, foodstuffs or other items, savings groups are, of course, widespread and now becoming highly digitized on the continent. And then also things around art, fashion, consumption. It's just this idea of how do you, lots of this is happening on WhatsApp, but it's a highly inefficient way to do that. And so lots of innovators are out there saying, how do we integrate wallets? How do we integrate better discovery, better payment systems, buy now, pay later, all of these things into that ecosystem.
And any names to look out for that where companies that you're seeing out there that could be the leaders?
So it's still pretty early, I would say. I hesitate to mention any
Putting you on the
names.
spot, I realize. Okay.
Can
Melis,
I maybe
please.
offer two names?
Do.
Just building on what Jeff was saying, there's definitely a lot of innovation in the e-commerce, fintech for e-commerce space broadly, particularly targeting small retailers, so very micro merchants that are really actually the fabric of the economy in a lot of these countries. So a few examples are a company like Wasoko, formerly called SokoWatch, that is actually expanding Pan-Africa right now and has an embedded credit solution on an e-commerce platform basically to serve micro retailers. I think that's one of the success stories in Africa in the e-commerce space. And other very much earlier stage that are playing along the value chain. So from logistics to provision or access to actual products and inputs from, say, the Unilevers of the world, et cetera, so intermediating that process to obviously integrating the payment aspects and to digitize basically the entire transactions with consumers and with providers. So companies like Boost, for example, are out there creating platforms that enable this, and I think we're going to see a lot more of those emerging.
Do you see a geographical concentration of some of these countries? I mean, you mentioned West Africa. Is West Africa leading over Kenya, which is the home of fintech?
Yeah, so there's four markets,
I guess.
They call them the big four, that are attracting most of the capital and where we see most of the innovation. That includes Kenya, Nigeria, South Africa, Egypt, followed closely by Ghana, and maybe now we're seeing a little more happening also in Senegal and other countries, but it's still really those four that are capturing the largest share.
Chris, how do you see the geographical mix of innovators, and I guess where are the countries that are where you're seeing the most innovation and where maybe the regulations are going the right way, the fewer restrictions? I know that currency markets also play a part, and the liquidity situation. What's been your experience?
I think Melis nails obviously the big four that would be the largest fintech markets. From a debt perspective, right now as of today, the macro does make some of those challenging. So Nigeria, from a debt perspective, is not really investable. Just the ability to get dollars on a timely basis is not there. So as an equity investor, you can take a longer-term view, but we can't as debt. So unfortunately, that's probably the biggest loss to us in terms of the market. Egypt is...
And that's been the case for some time, I'm guessing, right?
Yeah, I think we've not been active in Nigeria for about 2 years.
Okay.
But it's got progressively worse. I think at this point, probably nothing changes at least before the elections, but you've got a parallel market that's...
next year.
Yeah, it's next year, that's right, I think February or so. But you've got a parallel market that's at 700 or something like this, and the official rate's at 420, so it's just... Yeah, it's not possible to do business in Nigeria for a debt provider. It just wouldn't be economical even with the parallel market. Yeah. Unfortunately, even in Egypt right now, I think is hopefully more temporary. But at the moment, there is a real lack of dollars there as well. And so again, cost of hedging is very prohibitive. It's 10-15% a month. And Ghana also is probably going to go through restructuring. So I think Ghana also, unfortunately, is proving problematic. So I think from a debt provision perspective in Africa right now, taking single country risk outside the West African zone where you have a peg currency or South Africa is difficult. Kenya, Uganda, you can do little bits, but again, they're by no means entirely secure if you look at where government bonds are trading. And so our approach is really to work with Pan-African providers, so where that risk is mitigated because they work across different regions. I think that's maybe been a good evolution of the last few years. Now we have tens of companies we can work with that are Pan-African, and 5 years ago you'd have had next to none.
So is being Pan-African becoming easier or becoming less challenging? Has the African Free Trade Agreement has anything to do with that, or it's very early days for that, but yeah.
I think any initiatives like that can only be helpful. I don't know if it's directly helped to this point, but I think in Africa you have the scalable markets, which are again the ones we've talked about, and everywhere else really, when you look from an international capital provision perspective, aren't really scalable in and of themselves. Even a Senegal, Cote d'Ivoire are pretty small. And so I think addressing this from a Pan-African perspective, so you can bring capital across, I think really works. And so I do think you're going to see more and more of those that have had success in those larger markets spread. In fact, I think you're seeing it. Yeah. And it allows us as a debt provider to go into those markets, whereas standalone, it just wouldn't be scalable.
Well, Jeff, what about from the equity point of view? I know that you've got a lot of investee companies in Nigeria and elsewhere, but how's your geographical experience of, regions that are working for fintech and regions that aren't?
Yeah, so Nigeria over the last 18 months has soaked up a lot of the attention as well as the dollars in terms of fintech, and I think to Nigerians' credit, a lot of that has been just the rapid pace of innovation. In some ways, maybe catching up to East Africa and the prevalence of mobile money and payments there. For us, I think we're actually looking beyond the big four more often than we were, say, 3, 4, 5 years ago. So, Cote d'Ivoire, other Francophone Africa, and increasingly also to the north as well. And, I think what we're also all have been touching on too is that we're still very early stages. So even if you look at the free trade agreement, right, that's regulatorily there are now certain pieces in place, but there's important both logistics and payments and money flow developments that need to happen for that to ever become something that has teeth and is effective for startups and the way they think about that. So we're definitely looking at that, and then also real white space in terms of just the penetration of existing financial innovation, right? So insurance in Nigeria, health insurance has something like a 5% penetration, right? And I think we've backed companies, other companies are out there that are looking to increase that, many-fold. So there's still lots of room to run in those 4 markets as an equity investor with a long time horizon.
And Joe, your
So I guess I want to go back to your earlier point on, sort of some different companies, and I outlined sort of 3 sectors, so I'll kind of go back to that in a second. But I'm excited with what I see going on in Ghana. I'll be honest about it. I see some, there's a little blip in front of us, but I think that there's some really exciting things. So I would be, if I were kind of trying to think about where might be a great place to spend time, it would be there. As far as, I mentioned wallet, so I like a company called Paycode. I think they're doing some really innovative things. On the infrastructure side, I still like InterSwitch. I think that they've got a nice platform, and they're moving out of their core markets, and so I think that's going to be interesting to see how they strive to go forward. And then a couple of our clients like Flutterwave, MFS, Africa, and Tunes, again, fintechs in that category across those 3 segments: remittance, infrastructure, and wallet. I find to be very good names from companies we're working with.
Okay. I'm going to open it up to the audience in a few minutes. So if there's any questions, just raise your hands. We haven't got any fancy devices, I think. So question over there. Yes, please.
Good morning, I'm Dr. Chinyere Almona. I'm thinking about compliance and regulation. I'm just wondering if the markets where you operate, if you think that the regulators have kind of caught on or understand the fintech space and are doing what they should do, and perhaps how are you navigating cross-border transactions and regulation in relation to those?
If the markets are doing what they're meant to do.
The regulators, so who is regulating what is happening in the fintech space, and if you think they're doing what they should do? Joe?
Yeah.
Sure, I'll start, but nowhere near a regulatory expert. I think that the central banks, from a bank perspective, are doing the best that they can do. I mean, there are some environments in Africa where there is a lot of change going on, but I think the central banks are putting in very solid KYC infrastructure. They're putting in some countries, more strict requirements than in countries out of Africa. So it's quite impressive. So I think that directionally it's going the right way, but there's some length to go before I think it will be clear and aligned. And I think that misalignment also causes some challenges from country to country.
Miles?
I would completely agree, and I think there's a tension between central banks and regulators in general wanting to enable more innovation, like for the greater benefit, obviously, of the economy, and at the same time, obviously protecting consumers, regulating that so that it's done in a more orderly fashion, let's say, and that obviously has created certain ups and downs for a lot of startups in the ecosystem. Central Bank of Nigeria is an example of this, like one day having one position and then changing. Similarly, a lot of our startups that are trying actually to get licenses in Kenya, other markets, the process takes a very, very long time often, and that obviously startups don't have that luxury, like they need right to operate, and so there's still, I think, a tension between the speed at which innovators and entrepreneurs need to operate and the speed of regulation. And so for us as a fund and accelerator in this space, but also an ecosystem builder, we're trying to actually enable more dialogue. And I think the trend is definitely towards more communication early on versus doing things under the radar, which I think is positive.
Yeah, so I would segment it in terms of the type of fintech. So in the lending space, I would say that you've got reasonable regulatory oversight. If oversight's the goal of regulation in most jurisdictions, I think that more or less it gives some security. However, I think where regulation needs to push on is helping bring scale. So if you look at India, where the market is really advanced from a capital perspective, regulation has been shaped so that it really homogenizes all different capital forms, and therefore you've been able to bring a massive domestic market and really cheap funding. And we're nowhere near that at all in Africa, in any country. Similarly, if you look at Latin America, they have very structured forms in terms of having trustee structures and making secured financing much more appealing, straightforward, safe for an investor. So yes, providing some oversight, no, helping achieve scale. And I think if you look on the other side, on the payments side, I personally think, I don't know what Joe thinks, but I personally think the regulatory oversight is very weak. So I think the understanding of e-wallets and things from regulators is very poor. And so we often have to do a lot of that audit and verification ourselves because there's really I think the regulatory side is very weak.
Jeff, I don't know if you...
Yeah, not much to add. I would say that, it's a real tough thing to ask a regulator to be ahead of the game in terms of financial innovation. So in a way, they're always going to be playing catch up. And, to be slightly pessimistic or on the downside, one of the troubling things that I've seen, or we've probably all seen, is that they tend to chase after successful innovations, what I would call too early and with too big of penalties. I think, obviously famously, Uber skirted many laws over its sort of early years, and I think to the benefit of consumers, frankly, in some areas. And now in fintech in many countries in Africa, if a company raises $5 million, they suddenly have a target painted on their back by regulators when, we would much prefer that be them have that target on their back when they've raised $50 million, right? It's just not the discrepancy in the level of success and sort of dry powder to fix these things doesn't exist when you've raised $5 million. So, definitely need to protect consumers, but need to do so in a way that's less, I don't know, chest beating.
Okay, thanks for the question. If there's any more questions, just raise a hand. Yes, sir.
Hi. I'm just wondering how much of a threat are the domestic commercial banks in Africa to fintech? So when I go and see any decent bank, they have a strategy of entering the fintech space, especially on the payment side, setting up subsidiaries, some like in Nigeria moving to a holding company structure, which allows them to set up subsidiaries. So How much of a threat? Do they have is it a viable proposition? Do they have the expertise, the knowledge to compete with fintechs, like some of those that you mentioned? So just a general question on that.
Joe, I don't know if you want to.
I'll take a stab at starting on it. But so what I would say is that it seems to me that banks are beginning to realize better that they don't have the fintech expertise that they really need to have. And so a lot of them are looking to try to partner with the fintechs as opposed to compete with them. And their challenge is picking one that can partner well and getting that understanding, because fintechs tend to move at 100 miles an hour and banks tend to go at 10 miles an hour. So you get a discrepancy in both in culture, but also in just the methods of doing business. But I'd like to say that I think that the place they're trying to get to, from what I can see, is more in how do they partner as opposed to compete. So we'll call it a little co-opetition. So that would be my observation. And I don't think this has come at an easy and fast pace. I think there's been a lot of posturing over the past couple of years for sure.
Any other thoughts from the panelists?
Yeah, I would maybe take a generally contrarian view here, that I think the domestic banks are actually pretty well positioned. I don't think that they're innovating as fast as some would like, but at the risk of being too generalist or generalizing, the majority of African, bank account holders are not early adopters of, really frontier tech. And so that means that a huge amount of the savings is going to remain in domestic banks. And I think, the secret, maybe not so secret thing about a lot of fintechs is they all want to become a bank. The major hurdle there is, as we've already been mentioned, is licenses. There's creative ways that startups are using to work around that, but it still doesn't replace the top series of licenses that allow those domestic banks to operate from a position of power. And so, I think until regulation better supports startups, and startups are actually able to move into deposit taking, we're just going to continue to see a lot of API innovations, payment innovations. But in some ways, I somewhat going against what I said. It's still early days, but a lot of the low-hanging fruit has been picked there. So I do think there's an upcoming battle with the banks, and I'm not sure that startups are all that well positioned right now.
Yes, please, lady in the white jacket. And then the gentleman next to her.
You have a bad question.
Thank you. It's actually just almost a commentary onto that. I have some direct experience of it. I don't know if any of you have got, there's a flyer in the bags. Sorry, my name's Sarah Fitzmaurice from Executives in Africa, executive search firm. There's a case study actually in the flyers of the bags of exactly this situation. We had a Ghanaian bank that was looking to take advantage of the fintech space. And was really struggling to find a suitable partner for one reason. And actually, from that particular point of view, were concerned that they were going to get left behind in this space. So made the decision to actually set up their own subsidiary and engage with us to find them a specialist CEO to build a fintech business from scratch. So it is a very real problem, and I think one of the solutions is there isn't the expertise in-house, and there is sometimes the need to actually create a subsidiary, but bring in the expertise with the fintech experience in order to set up, and the benefits of that enables the bank to have a little bit more control over how they're actually setting up these organisations, and the types of products they're bringing. So if anyone's interested and they haven't got a flyer in their bag, we've got a few on our desk to come and see, because it was a really interesting search front to back to actually find somebody suitable. That's another solution in that situation.
Okay, thank you. Gentleman next to you.
Thanks. My name is Yusuf. I'm from Standard Bank, biggest bank in Africa. Just a perspective from the panel on international capital driving African fintech versus African capital driving African fintech. How you see that evolving? What are the shifts you see? Thank you.
Jeff?
Yeah,
I've got a tangential question to that as well, which is African entrepreneurs driving fintech as opposed to non-African entrepreneurs as well.
Yeah, so just to touch again on the big deal and the work that Max and Maxime have done. If you're not a follower, I think all of us probably are because they do great work. So over the last couple of years, something like 40% of investments in African startups had no major African focused investor in them. And again, I think that really fell off a cliff in May of this year. So it'll be interesting to see where the final number comes out for this year. And then depending on, next year, I think it's going to be even more of a bellwether in terms of whether they come back in the market or not. What's interesting is I think a lot of fintech innovation elsewhere is now dominated by the huge players, right? So Apple Pay is now in over 90% of retail outlets in the US, and that went from essentially no penetration 5 years ago, same like a 10x increase in users. And that's a much harder, I'm not a US investor, so it's hard for me to say exactly, but I think when you're looking abroad and you're seeing very low penetration rates in places like Africa of insurance, of non-cash payment methods, and you're just seeing blue sky opportunities to invest, and at valuations that could very well make sense for those funds. The last thing I would say is that I think up until I talked about how there's a lot of activity in the second half of 21 and first half of 22. I think up until that point, a lot of international investors had difficulties understanding how they were going to deploy the right magnitude of capital into those opportunities. Prior to the Paystack exit, and really, looking at 16, 17 into 18, a Series A round, as entrepreneurs and investors were calling it, was $3 million. And for a major international startup investor, that's, you can't get out of bed for $3 million. You got to be writing $20 or $30 million checks. So I think that's also part of it. They finally are starting to see African fintech innovation as a place where they can put real dollars and potentially see the type of return profiles that they're looking for.
If I can double tap on what Jeff is saying, I think we're definitely in 2021 seeing a boom in foreign capital going to African fintech, and what a lot of players in the continent call tourist capital, and that's been pulled back. So we are seeing in deals, those kind of players actually now being much more risk averse, and the challenge actually comes, as Jeff was hinting at later stages. Because there's actually a lot more funds right now in Africa. They're African VC-led at the pre-seed to maybe pre-series A, like let's say pre-seed to A stage. But then after that, it's much harder to have local institutions with the amount of, as you were saying, dry powder to really support the growth of fintechs, and that's where the international, there's a lot of light. The international players are still needed, right? And that's where your DFIs are intervening typically, and other large funds. But there's very few. I mean, one of the larger sort of Series B funds in Africa, what's it called again? Africa Invest. It's not that large, right? And it can't obviously support like the B2D growth. So that's certainly an issue, and I think we need a lot more at those stages as well. But at the same time also, the growth and the overall ecosystem of African VC funds, it's positive, because eventually that's going to create proof points that attract more LPs to the space.
I don't know if you guys want to address this. Or...
I'll pass on this.
I have a question.
Yes, please.
It's me. Yeah.
The
buzzword in Africa today is about the continental free trade area. I just want to pick your perspective on what is the fintech doing in aligning their work into the continental free trade, which is the second largest beyond WTO, in promoting intra-African trade. Because what Africa wants to do is to promote intra-African trade. So what is fintech, African fintech doing in promoting that payment platform?
Okay. Chris, you want?
So specifically in relation to the agreement, I couldn't answer. In terms of what we see fintechs doing in terms of promoting generally, lost my mic. So we're seeing as I alluded to before, we're seeing an awful lot of fintechs that have had success, particularly in one of the big four markets, now spread regionally. And that's making sense both because of the macro environment. I think it's important to say on the macro, actually Africa has incredibly strong macro in terms of underlying growth. It's just the government financial positions that are vulnerable. And so I think because of those, they're seeing the need to diversify across the continent and also to achieve scale. So I want to say all of our leading fintechs in Africa are all now pursuing a pan-African strategy. I think it's all of them. So I think it's very promising in that light.
Okay. In the interest of time, I'll move on to, yes, please.
Okay. Hello, thank you, everybody. My name is Lawa Nebuka Muhulela from Botswana, and I work with an infrastructure fund based out of Botswana, focusing on Botswana and SADC area. Earlier this year, the Afro-Exim Bank and the AFCFTA Secretariat, the Continental Free Trade Area Secretariat, launched the Pan-African Payment Settlement System, financed by the Afro-Exim Bank, because I know some people have been asking about questions about cross-border trade, and I know you mentioned it earlier in the panel as well, of how our payment system is going to be working. And so the PAPS system aims at having transfers done in local currency to reduce the reliance on hard currency when people are doing cross-border trade. And this is to aim to facilitate the continental free trade area. One of the things that they're doing right now is they're signing up central banks and banks. So not yet signing up consumers or people who do businesses, but I thought that was something that I wanted to mention. And also one of the things that we've been asking ourselves as young people in Africa is what are the challenges and opportunities in terms of coming up with innovative platforms that will latch on to PAPS as well. Thank you.
Okay, thank you. We've got a couple of minutes left, so yes, please, over here. Thank you.
Hi, Senda Zakrawi from AfriCinvest, Fintech and FI team. I would like to know your opinion about the cryptocurrency, and especially how do you perceive it in the near future? We have started seeing some fintechs adopting the blockchain. Do you believe it's a bit too early stage for now, or it's going to be the next move for digital currency, especially that some countries started adopting the digital currency? I can say Nigeria or Ghana. Thank you.
I'm so glad you asked that, because I think a couple of years ago this would have been a topic of discussion, but Mylis, what's your...
It's a great question. I think the short of it is early in terms of the development of the technology, the success stories, like having certainty that it actually will take off, and at the same time, we actually are seeing very interesting applications of the blockchain. So not just digital currency in and of themselves, but actually blockchain is an enabler of other solutions that can have a big impact, especially as far as Catalyst Fund is concerned, more underserved populations, driving radical affordability, for example, of remittances, sort of in the payment space, but also, for example, innovations on the way that we think about recording land rights, or other types of solutions that can use that, right, as a verification and sort of security system. So, however, I think though there's also a lot of hype around blockchain. So like the way we think about it is really looking at sort of what's the end goal. So not at the technology in and of itself, but rather what's that enabling, like what's what is going to mean for the customers that end up benefiting from the service, the service. But it's not a negative screen at all for our fund. Like we definitely are excited about the potential, but I do think it's early. Maybe some of the other panelists will disagree with me.
We've probably got less than a minute left, but any perspective?
Yeah, so I think it's very much in terms of the application. I think blockchain, theoretically, should have a very good application to Africa because you have, in general, maybe weaker institutions or lack of institutions. So if you can centralize that verification kind of angle, I think it's very important. I probably think on the payment space, it's a little overplayed because I think it's going to be contrary to what maybe central banks, governments want. But I think maybe in things like centralized credit bureaus and sort of things like that, it could really apply.
Yeah, and just from my own experience, from my blockchain reaction, we have a lot of different anecdotes and examples of companies that have attempted blockchain solutions, and the common thread running through them is that some of them are very good applications, but it's about the investment, and they're always untested, untried, and it's the age-old problem of getting capital to very early stage applications. But thank you, panel. Thank you very much for a fascinating discussion.
Thank you.